Hey, I wanted to take a look at option time lengths. This is Brian Lewis with MMT Investing, and things just changed. So I'm looking at Dell. So here's what Dell did during the bull trap. When most of the stock market kind of did this action, Dell did a huge bounce here, and then it just kind of never really made it. It kind of came up early and then never really ran up more. So I just wanted to take a look at options. Like, say you got an option out to the end of June from here, and you're waiting on a down move. This whole time length in here when it's going sideways, that's costing you money. And the option is becoming less valuable the whole time it goes sideways. And if it goes sideways all the way to the end, then you lose the whole option, you lose all of your money. So it's really important with options that it goes down and it goes down right now. So like this point is a higher point than this point. But if it's going to go down right now, this kind of sideways stuff is not as good as straight down from where you're starting the option. So just to look, like if you have a really long-term option from here out to the end of June, like this is okay, a couple weeks, it's kind of going down, that's all right. But say if you had a shorter option that was only like 2 weeks, then that's not a big down move and you're out of time. So it's really important to time your options and to get down into the money immediately and not mess around on a sideways consolidation area. So now that this bull trap has turned over, it's a time when you could possibly look for instead of a 2.5 month option, maybe a 3 week or a 5 week more aggressive thing. Like I just got some options now that are out of the money with a shorter time length that are super cheap, and you can get a really big return on them if it happens. But it's really risky. I just have like a couple smaller positions where I did that, and the majority of my puts are long-term puts out past the end of this whole cycle, just to make sure that I have time to get down at some point during the cycle. And that is the idea with timing and shorting Dell because they have the worst balance sheet in the XLK. Even though we saw with the USO that you can smash that like button right now to help me out with the YouTube algorithm. No, we saw with the USO that the ETF can actually do worse than the companies inside of the ETF just because of the way that derivatives are structured and the futures inside the ETFs. Um, oil oil was low enough against the oil's futures that the ETF was doing worse than the companies inside the ETF. So that's interesting. So Dell's a short, but the XLK may even be a better short than Dell, even though Dell's the worst balance sheet. The XLK, just the structure of the ETF with derivatives and futures, may be worse than the worst company in the XLK. Not that I'm sure Dell is the worst company. It just looks like the worst company. I mean, their business model doesn't isn't terrible for the current situation. Like they're kind of a work from home friendly business model. So it's not the business model, just the balance sheet. And this is not investment advice. Happy trading.